module 1. So there, so we have discussed about the companies. So companies are those which are registered under the Companies Act. So we know that. So company will be the monies association of persons who contribute monies or monies worth for the business. So for the business, for the common purpose, they are invested the money. That will be called as a companies. As per the Companies Act, so companies are those which are registered under the Companies Act. So association of persons or the group of person who are registered under the Companies Act, they will be called as in a company. So the features of a company bandaga, there will be a voluntary association. That means the company itself get voluntarily, there is no force for the company for anything. Next, the company is a separate legal entity. That means the company is different and the members is a different. So company is responsible for the company's transaction and the persons will be responsible for their personal transaction. There is no mix up with the persons and the companies. Then the company is a common seal. That means as a person, as a natural person, we have the right to have a sign for an agreement. So likewise, if a company has a for a transaction for entering into a contract, they need a seal. So every company should have the common seal. Then company has a perpetual succession. That means so if the members can come and go, but company will be stay alone. So if the shareholders can invest in the company, they can withdraw, but the company will be remain constant until that liquidated by the tribunal or by itself. So no persons are will be engaged for the company closure. So let's move on to the types of companies. There is a number of types of companies. First one, move on to the on the basis of formations. We have the two companies. First one, statutory companies and registered companies. Statutory companies are those companies which are passed the special resolution in the legislative. ಯಾವ್ದಾದ್ರು ಸಂಸತ್ತಿನಲ್ಲಿ ಒಂದು ರೆಸಲ್ಯೂಷನ್ ಅನ್ನು ಪಾಸ್ ಮಾಡಿ ಕಂಪನಿ ಆಕ್ಟ್ ಆಗಿರುತ್ತೆ, that will be called as statutory companies. It may be LIC, that is Life Insurance Corporation, that is enacted by the LIC Act. So second type will be registered companies. So registered companies are those companies which are registered under the Companies Act. It may be 1956 or 2013 or 1870. So ಇಷ್ಟು ಮೂರು ಆಕ್ಟ್ ಅಲ್ಲಿ ಯಾವ್ದಾದ್ರು ಪ್ರಯರ್ ಆಕ್ಟ್ ಗಳಲ್ಲಿ ರಿಜಿಸ್ಟರ್ಡ್ ಆಗಿ ಎನೇಬಲ್ಡ್ ಆಗಿರುವಂತ ಕಂಪನಿ ಕಾಲ್ಡ್ ಇಸ್ ರಿಜಿಸ್ಟರ್ಡ್ ಕಂಪನೀಸ್. So next we classify the companies on the basis of participation of public. So we are divided into private company and the public company. So in the private company we are going to have the minimum of 2 members and the maximum will be only 50 members should be there. There is a restriction for the transferability of shares. There should be a 1 lakh paid of capital in the company. Those company will be called as a private company. So in the public company, if you call it the public company, there should be a minimum of 7 members and maximum will be unlimited members of company. There should be have the paid of capital of rupees 5 lakh. They should have the at least minimum 3 directors and there is no restriction on the transfer of share from one person to another person. So that company will be called as a public company. Next, on the basis of liability of members, we classified the company into limited liability and unlimited liability. So unlimited liability means the persons or the members are liable for all the activities of the business or the transaction and obligations. But the limited liability of the companies, again they will going to segregate into two parts. First one, company limited by shares and company limited by guarantee. So company limited by shares means the members are responsible and liable for the amount contributed on shares. So if I am subscribed only 1000 shares, I am responsible for that 1000 shares only. Okay. Next, company limited by guarantee means so the persons will be responsible and have the liability for all the amount guaranteed by that person or the member. So if a company goes lost, if I agree that I pay only 1000 rupees means I am responsible for paying only 1000, not a more losses. So that is what company limited by guarantee. Next, other than this, they segregated the miscellaneous. First one will be the foreign companies. So foreign company are those company which are existed or registered under the outside the boundaries of the country. That means outside the India, that companies are called as a foreign company. Next one will be the government company. The government company are those company which have owned the 51% of shares of the company. So majority shares 51% are owned by government company. Then listed company. So listed company are those company which are listed in the stock exchanges. Then holding companies. The holding company are those company which acquire the majority shares of the subsidiary company and it has a control over the activities of a subsidiary company. Next we will move on to the subsidiary company. So according to the section 4 subsection 1, company is deemed to be a subsidiary company when it has been controlled by a holding company and that has a minimum shareholdings, and that company should have obtained the permission for taking any decisions for their organization. Then move on to the provision of the companies for relating to the maintenance of accounts. So how they should be maintain account. So every company should be keep the registered office proper books of accounts. That means they should maintain the proper books of accounts and the financial statements. Next, where the company has a branch office, whether outside India or within India, for both they should have to maintain the books of accounts. Next, for the purpose of subsection 1 and 2, the proper books of accounts shall not be deemed to be kept in the respect of the matter specified therein if such a books of accounts is not kept as necessary to give the true and fair view of the state of affairs. So their branch office shall be cases maybe explain the transaction. Next, move on to the accounting for the record regarding the issue of shares. If the company issue the shares to the public, so what are all the transactions they have to record? For that, so you have to know the journal entries for that. So it is most important for your examinations. So please keep note down of the journal entry for the receipt of application money. When you are giving when you are giving the prospectus to the public, they have to apply for that. For that, you receive the application money. For that, you have to pass the transaction that bank account data to share application account. So next, then after receiving the application money, that has to be transferred to share capital account. For that, you have to transfer the entry that is share application account data to share capital account. Then on making allotment, after the application is received, you have to make an allotment. So for the A person, I'm allotting these shares. For that, for allotment, how much amount you are collecting, for that you have to make a transaction that journal entry share allotment account data to share capital account. Then on a receipt of allotment money, so you are allotted the shares, for that you are receiving a money for rupees, for example 3 rupees, for that you have to make an entry that is bank account data to share capital account. After the allotment, you go for the making a first call. That means you have to pay the certain first call amount. For that, share first call account data to share capital account. Then on the receipt of first call money, you move to the bank account to the share capital account. Then on making a second call, second and final call. So transaction will be share second and final call account data to share capital account. So on the receipt of second and final call. So after the transaction is passed, you're going to receive the money. For that, you have to make an entry that bank account data to share second and final call account. So next, when directed records is made on the cash book, record that. So on the cash book, you have to record that on application amount you have received, on allotment amount, how much amount you have received, that has to be recorded. So these are related to the issue of shares. So while issuing a shares, we have the three part of issuing shares. So that first one you go for the initial public offerings. The first public offering is the equity share of a company which is followed the listing of shares in the stock market called an initial public offer. That means if I want to issue the shares first, initially I have to listed my shares in the stock exchange. That called an initial public offer. So next, follow up on public offer means as the companies grow, they are likely to make a further issue of shares of the public. It is known as secondary public offer. Okay. Then move on to the prospectus. So prospectus is nothing but an invitation made by the company for the shareholders to subscribe the shares of the company. Then share application, that is in a form that has to be filled by the persons or the investor who are interested in our company to invest their amount. Then allotment, after receiving an application, you are going to assign the shares to the number of persons, that will be called as allotment. Then you move on to the calls on shares. That means everyone not pay the full amount of shares. For example, if they maybe fix the per share with rupees 10 rupees, so they on the application they collect 2, on the allotment they collect 3. So remaining 5 rupees they can collect on an installment basis. That is first call they may can call out 3 rupees and final call that will be calling 2 rupees. That is amount due from the shareholders is we called in the calls money. Then issue of shares. So we can issue the shares in the three forms: issue of shares at par, issue of share at premium, issue of shares at discount. So issue at par means if it is in a share price is 10, I am issuing the that 10 rupees for the public. Then issue of share at premium is more than a cost value. If it is a share value is 10 rupees per share, so I am issuing at 11 rupees. That is increasing the market value of the shares. Then discount means if it is the share value is 10 rupees face value, I am going to issue for the 8 rupees. Means we are discounting 2 rupees will be reduced. That will be called an discount. Then we are moving to the forfeiture and reissue of shares. So forfeiture and reissue is nothing but forfeiture is nothing but cancellation of shares. If someone not paid the calls money, so as you said, due amount if they not paid, we are going to cancel those shares. Then cancelled shares must be issued to some other person. It may be discount or the premium. So basically, the forfeited share can be issued at a discounts only. Then, so if shares are discounted, the transaction should be like this. Means forfeiture of shares at discount, you have to make a transaction that share capital account data to share forfeited account and unpaid share calls account. So this entry should be passed. Then if you are reissue the shares, if I cancelled one Mr. A shares and I issued that shares to the Mr. B, for that you have to make an entry that so bank account data to share capital account. Then if forfeited account is reissued at a premium, if I go for the I forfeited a share at 10 rupees, I issued at 11 rupees. For that, you have to make an entry that bank account data to share capital account to security premium. So, to credit entry will be passed for that. So, let's move on to the first problem or illustration related to the issue of shares. So, here clear the concept. First one. So, Leela Limited issued 22,000 equity share of rupees 10 each payable in a full on application. The company received application for the 22,000 shares. The application were accepted in full. Show the journal entry for that. So we are receiving application that share application money and allotment will be 2,20,000. Then we will transfer that amount into capital account. So equity share application and allotment account data to equity share capital account. So these questions, this kind of question, they may ask for the 5 marks. So if it is in a 15 marks or the 10 marks question, they move to the another problem that Mira Limited was incorporated with authorized capital of rupees 4,000 equity share of rupees 10 each. It offered at the public for subscription 1,000 shares on 1st April 2011 payable as under. So on application they are paying 2 rupees. On allotment they are paying 3 rupees. On first call they are paying 2 rupees. On second call they are paying 2 rupees. So application money or share were duly received on 15th April. The directors made an allotment on the 1st May 2011. All the money were duly received within the 15 days of the making the allotment and calls. Pass the journal entries further. So for the first, you have to make a journal entry for the receipt of application money. So we already know that bank account data to equity share application account. So you are issuing a 10,000 shares into 2 rupees application. So 20,000 and 20,000. So second entry will be that application money has to transfer to the share capital account. For that, equity share application account data to equity share capital account. So 20,000, 20,000 narration transfer of application money to the share capital account. So third entry, you go for an allotment. So equity share allotment account data to equity share capital. That means for allotment you are collecting 3 rupees. So 10,000 shares into 3 rupees will collect the 30,000 and 30,000. Then that is allotment transaction due entry. Next you are going for the received entry. So bank account data to equity share allotment account. So 30,000, 30,000. The narration will be allotted money will be received. Then we go for the June 1st. We are making a first call. So equity share first call account data to equity share capital account, that is due entry, means that amount has to be received anta. So on first call we are collecting 2 rupees, 10,000 into 2 rupees we'll get a 10,000, 20,000 and 20,000. Next on the June 15th, bank account means you are receiving the first call money, that is bank account data to equity share capital account 20,000, 20,000. So you are receiving the money. Then on the 1st July, we are going to receive the second call money, means due entry you have to pass for that. So equity share second and final call account data to equity share capital account. On the final call, you are collecting 3 rupees. So you are issuing 10,000. So 10,000 into 3 rupees, we collect the 30,000. So July 15th, so bank account data to equity share first call account, sorry, final call account, you are receiving the money, that is 30,000 and 30,000. So these are all related to the issue of shares. So this is the problem related to the issue of shares. There is no additional adjustment will be incurred for this. So if you know that on which transaction we are getting the amount for each and every transaction, for the application you have to pass the 2 entries, for the allotment you have to pass the 2 entries, and if the first call you have to pass the 2 entries, one is due and one is received, and the final call you have to pass the 2 entries. So these are all related to the issue of shares. Then if the company issues and forfeiture of shares. So for that, move on to the another problem. we can look at the page number 26, the problem number 8. So give the journal entries for the following forfeited and reissue of the following shares. So Pay Limited forfeited 300 shares of rupees 10 each, fully called up for the non-payment of final call money of rupees 4 per share. These shares were subsequently reissued for the company at rupees 10 per share, fully paid up. That means some PE company has not paid the final call. So on shares 300 that has to be cancelled and reissued to some person. So ಅದಕ್ಕೆ entry pass ಮಾಡಿ ಅಂತ ಕೇಳಿದೆ. For that sundry assets account it to Kiran account 2 lakh 2 lakh, and the to Kiran account to equity share capital, security premium and bank account. So for that you have to make an entry. So these are related to the issue of shares. So it is most important. Please do work out. Do you have any doubt regarding that? You can ask the doubt in the chat box. Then move on to the issue of debenture. As already stated, the company can raise the capital by issue of debenture. The debenture is based on the borrowing power of the company conferred the section 292 subsection 1 of the Companies Act. So the shares are the also instrument, but is a debenture is also one of the instrument for raising the capital from the public. So companies are nowadays are raising the substantial amount of long-term funds by issuing the debenture. So for the setting of new projects or expansion of diversification of existing projects, normal capital expenditure for the modernization, amalgamation of companies, for these they need an additional fund. So for these they are raising the obtain the loan from other companies. Okay, so for the treatment of account, for the issue of debenture, like shares only you have to make an entry. For the receipt of application money to bank account you have to make an entry. For the allotment of debenture, so where we are use the share, on those time you have to use the debenture. So that means the procedure will be the same. Then on to the problem. So Pratik Limited purchased asset of book value of 99,000 from another firm. So it was agreed that the purchase consideration paid by issuing a 11% debenture, rupees 100 each. So assume debenture have been issued at par, at discount 10% at premium. Means they are issuing the debenture in the three forms. So what are the entries you should be passed? So first one, for the asset account data to vendor account. That means you are purchasing an asset on a discount basis of 10%. So we will get a 99,000 and 99,000. Then vendors account data to, we are issuing a 11% debenture. So allotment 1990 into 11% into 10 each will get 19,000 and 19,000. Then next account will be vendors account to discount on issue of debenture. You are issuing at a discount to 11% debenture account. To vendors account you are going to 99,000. You are discounting 11,000 rupees. So total to 11% debenture account will be 1,10,000. So 1,100, that is 99,000 of 90 debentures will be issued at 100 each. So these are all the transactions should be passed, general entry should be passed while you are issue the debenture to the persons. So here the first module related to the issue of shares and the debenture will be completed. Let's move on to the second unit, that is redemption of preference shares. So redemption of preference share is nothing but redemption means they are repaying the capital. So company's capital when they are getting a amount. So if I get a share preference share, I should preference share and get a capital of rupees 1 lakh. So redemption means I'm buy back my shares and giving the 1 lakh to that person. That capital will be repaid to that person. That will be called as an redemption of shares. Okay. So according to the section 80 of the Companies Act, preference share can be redeemed on the condition below. So when we can redeem or we can repay the preference shares, preference shares to be redeemed must be fully paid up. So that means the share should be fully paid up. So that means the share price is 10 rupees, means that 10 rupees should be fully paid up. There is no should be balance while you are forfeiting the shares. Then preference share must be redeemed out of the profit which would be otherwise available for the dividend out of the proceeds of the fresh issue of the shares. That means your preference share should be capital should be paid, that means repaid out of the profits only. No other cash should be used for the redemption. Then any premium payable on the redemption has to be provided from the out of the profits or out of the security premium account of the company. So if your redemption you're paying a premium, that means take paid only 10 rupees, you are paying 11 rupees. On that time that 1 rupee should be used from the profit or the security premium account that separately maintains for that. So that amount can be used. When the shares are redeemed out of profit, the face value of the shares redeemed must be transferred to the capital redemption account. So when you are using the profit on that time, that balance repaying amount should be transferred to the capital redemption reserve account. So capital redemption reserve account is available only for declaring fully paid bonus shares. So that will be available for the fully paid up bonus share things. Then move on to the accounting treatment. How they treat the preferential accounting. So for making a preferential fully paid, so sometimes they paid only 10 rupees, 11 rupees shares, they paid only 10. There is a partly paid up shares. On that, you have to make a transaction to be converted the shares into fully paid up. For that, for making a final call due, that means due entry pass ಮಾಡಬೇಕು. So final call is to dividend. Then you are making a receive entry. So they have received the money. Then you are converted partly paid up preference shares into fully paid up preference shares. Next, for making a issue of shares, if you are issuing a share, what are the transaction or the journal entry you should pass means bank account data to share application or allotment account. This transaction should be passed. For arrear of cash, if the cash is not received from the person, for that you have to make a transaction that bank account data to bank loan account. Then amount due to preferential holders. So what are the amount is due to the preferential holders? For that you have to make preferential capital. That is what you are paying right now. Capital no ವಾಪಸ್ ಕೊಡ್ತಾ ಇರೋದ್ರಿಂದ for that you have to make preferential capital account data to preferential holder. So these are all the transactions should be passed. So these related to the second module, that is a preferential related. So let's move on to the our unit 3, that is redemption of debenture. So in the previous unit we discussed about the redemption of preferential. That means for repaying the amount of preferential, for that you only repay the fully paid up preferentials only. So partly paid up preferential cannot be redeemed. Okay, then redemption should be made out of the profit only. And if it is in a premium will be paid for the redemption, that has to be used from the security premium. If the account is redeemed, that amount should be transferred to capital redemption account. These are all related to the redemption about preferentials. Then move on to the debenture. So according to the section 2 subsection 12 of the Companies Act of 1956, debenture includes debenture stocks, bonds, and any other securities of a company, whether constituting a charge or a world deber, which means to owe. That means they have the rights to receive the amount or the interest on that. The word debenture has been derived from the Latin word debere, which means to owe. The debenture is a bond, usually under the common seal of the company, secured by a charge of the company proper undertaking, bearing the fixed rate of interest and being either repayable within a specified period of time with the due and interest. So debenture is nothing but a paper. That is a piece of paper where the company is given a promises that, so I am issuing this percent of the debenture for collecting the money. I will pay the regular interest of this much and I will repay the principal amount on this time. That these are the conditions will be specified on that paper. That paper will be called as a debenture. Let's move on to the kinds of debenture. That means different types of debenture. So first one, registered debenture. The debenture which are entered in the books of a company and payable registered holders is called a registered company. That means debenture which are registered in the company, means that has to be registered in the company registered book. That debenture will be called as a registered debenture. Then bearer debenture. The debenture which are payable to the bearer, thereof called as a bearer debenture. It is an interest is paid to its holder. They can transfer without performing legal formalities. That means if I hold a bearer debenture, so I can easily share that debenture certificate to some other person and collect the money. So there is no legal formalities required for the bearer debenture. Then secured and mortgage debentures. The word itself is telling that secured. That means that has to be secured for some assets or the some instruments of the company. Next, simple naked and unsecured debenture. That means they are not get a secured. That means they do not have a guarantee of the payment of their capital. If it is in a mortgage debenture, if they mortgage the land and lend the money for us, so if I am not paid the money for them, they can sell the land and they can obtain their money. But in unsecured creditors or the debenture, they do not have any rights on the assets of the company. They have they do not have any secured for their capital amount. Then redeemable debentures. So redeemable debenture means that debenture can be redeemed for the particular period of time. So we have the only that time for the redemption. Then, so irredeemable debenture, the debenture which are not repayable during the lifetime. So that means they invested in the, you are not paying the amount for them back till the company will be wound up. That will be called as an irredeemable debenture. Then rights debenture. So with effect from the 2nd August 1979. So any company issued the debenture, then its existing shareholders have the first right to the debenture. That means if the company is going issuing the debentures again, the existing debenture holders give the first priority for them. After that, if they are not ready to give the lend the money against the debenture, then they can issue for the another person. Then issue of debenture. So the process of issue of debenture is explained as follows. That means when debenture are issued, their face value of the normal value, they are said to be issued at par. So when the debenture is 200 issued, the 200 should be at par. Okay. Then redemption of debenture. So time redemption, amount paid redemption, and sources of which will be redemption. So let's move on to the accounting treatment for the redemption. So for the redemption, you have to make when the debenture redeemed at par. So when you are redeemed at the face value, you have to make a entry that debenture account data to debenture holders account. Then when debenture are redeemed at premium, that is more than the face value, debenture account data to premium on redemption of debenture account to debenture holders. So these entries should be passed. So on a making of payment, you have to make an entry that debenture holders account data to bank account, because debenture holders will be receive the amount, that is debit the receiver and the credit the giver. So the bank will be giving the amount. Next one will be the sinking fund method. A sinking fund method may be defined as a fund created out of profit and invested in readily realizable securities with object of providing a definite amount of money to particular date. So fund is reserves represented by the investment. So sinking fund is used for the specific purposes to replace the an asset and repay the liability, that is debenture. Then types of sinking fund, there will be a cumulative sinking fund and non-cumulative sinking fund. For the cumulative sinking fund is a sinking fund which is maintained on a cumulative basis. That means every year they have to have the fixed amount should be repaid for the debenture holders. So non-cumulative amount means they do not have any fixed term for the repayment of money. Then move on to the next one, insurance policy method. So under the insurance policy method, the amount set aside out of a divisible profit as an annual allocation of a sinking fund, it is utilized on the taking an insurance provided for the funds. So on that basis, you are to making a calculation. Let's move on to the first problem. So Vardhan Limited issued 10% debenture of rupees 6 lakh with a condition that they should be redeemed after the 3 years at a 10% premium. So the amount set aside for the redemption of the debenture is invested in a 5% government security. The sinking fund is stable, shows that the 0.31720,855 at 5% compound interest in the 3 years will become 1. So you are required to give the journal entries for the following transactions. We know the face value of the debenture will be 6 lakh, add premium on debenture will be 60,000. So amount payable for the debenture holder should be, you have to pay the 6 lakh 60,000. So amount to be transferred to the sinking fund method, that is they given the table value into 6 lakh 60, you have to pay the 2 lakh 9,358 for them. So for the general entries for that first one, beginning of the first year, bank account data to loss and redemption of debenture, because we are paying extra 60,000 for them. To premium redemption of debenture. So for the bank account, you are paying 6 lakh, loss on redemption will be 60,000. That means you are paying extra, that is 60,000 premium you are paying. Next, on the end of the second year, profit and loss appropriation account to a sinking fund account. That means the transaction for the sinking fund method, we are getting a 2,99,358 that has to be transferred to the sinking fund account. So next, at the end of the second year, you have to transfer the entry of bank account data to sinking fund, that is 10,468. That means they become the 1 rupees for the next month, next year. And on the end of the third year, you have to make a 6% debenture. So redemption of debenture account data to 6 lakh and the premium on redemption will be 60,000. Debenture holder will get a 6 lakh 60,000. Next, debenture account data to debenture bank account, that is debenture paid off. That means we are paying a due entry and you are making a due entry. So these are all the transactions should be passed while the debenture is issued and you are making a under the sinking fund method. So it's also important question for the 10 marks. Go through the questions. If you have any doubt, click on the chat boxes. I will give the solution and clarify your doubts. Next, move to the another problem on the debentures. So Meena Limited issued 6 lakh debenture on the 1st April 2001 following the terms and the conditions. So sinking fund should be created yearly, appropriation of profits to the similar amount to be invested. Then the company will have the right to purchase the cancellation of debenture from the market when available below par value. Then the debenture are to be redeemed on the 31st March 2007 at a premium of 2%. The following as balance appeared in the books of company on the 1st April 2006. First one, sinking fund, that is 4,43,250. Sinking fund, 4,43,250. Debenture account will be 4,50,000. The following other transaction took place during the subsequent 12 months. So 1st October 2006, rupees 30,000 debenture were purchased for the 26,000 and cancelled immediately. So the amount of being provided out of the sale proceeds of the investment of the book value will be 34,800 and made at a 33,900. The income from the sinking fund investment of rupees 22,200 received on the 1st October 2006 and not invested. So on the 31st March 2007, remaining sinking fund investment will be realized to the 4,23,000. Then the remaining debentures were redeemed on 31st March 2007. Pass the journal entries to record these transactions. Also show the relevant ledger account for that. So you have to make a journal entries also for the ledger. So first account will be bank account to debenture sinking fund and to sinking fund investment. So we know that the bank account will get the 33,900 and the debenture will be 900. So we'll get total 34,800 for that. That is sale of investment at a loss. Loss ಅಲ್ಲಿ ನಾವು ಸೇಲ್ ಮಾಡ್ತಾ ಇದೀವಿ. Then debenture account to bank account data to debenture account. So these are all the transactions you should be passed. So let's move on to the what are all the subsidiary book ledgers you should be passed. So you have to make a debenture account, debenture orders account, and debenture sinking fund account, and debenture sinking fund investment account. So in the debenture account for the debit side, you have to take bank account 26,000 and a profit and a collection of debentures 4,000. So to debenture holders account, you have to pay the 4,20,000. Total will be 4,50,000. For the credit side, you have to make a balance carried on. That will be in a balance will be account will be closed. Then for the debenture holders account, you have to make a bank account because you are receiving the amount of rupees 4,28,400. So for that debenture account, you are paying a 4,20,000. So premium on the redemption. For the redemption, you are paying a 8,400. So total will be 4,28,400. That will be closed on the account. That will be debenture holders account will be closed down. Next, debenture sinking fund. So debenture sinking fund means the bank account. So by bank account is 33,900 and by bank will be debenture sinking 900. Total 4,57,800. So on the debit side, you have to make a balance carried on of rupees 4,43,250, which are been taken in the last transaction, and two debenture sinking fund will to transferring 14,550. So that will be account will be closed. Next will be debenture sinking fund account. So for that, for the debit side, you have to take debenture sinking fund. That is investment we are making a 900. For the general reserve, you are transferring on the last will be 30,000. Premium you are paying 8,400. So general reserve total will be you are paying 4,44,700. So on the credit side, you have to make a balance carried on, that is 4,43,250. By bank income, that is 22,200, that given in the adjustment, and the profit on the cancellation of a debenture. So if you cancel the debenture, you're getting on the 4,000 rupees. That is also mentioned in the adjustment. That is 4,000. And by balance, so if you make a balance, we'll get a 4,84,400. So remaining will be balance carried on. That will be balanced figure. Then we have to close your account. So these are all the related to the debenture. So in this unit, we go for the key point that it will be in the redemption of debenture means we are discharging the liability, means we have paid off that capital. Sinking fund means the fund is created out of profit invested in the realizable securities. Then insurance policy means amount set aside for the divisible profits of annual collections. Then non-cumulative sinking fund means in sinking fund which has interest are received on a investment. So these are all related to your third unit, that is issue of fund, redemption of debenture. So I think clear with this. Let's move on to the first group, last topic, that is unit 4, that is underwriting of shares. So you know what is an share? Shares is a total capital of the company will be divided into different parts. That part will be called as an shares. How the company will have the right to underwriting the shares and not over. First one. So underwriting is in a contract where responsibility is taken or the guarantee is given that the shares or the debenture of the company will be subscribed for. Some individual firms or the companies give the guarantee that so many shares of the company will be taken up by the public. So in case these shares are not taken up by the public, they are taken up by the guarantees themselves. So those who give such a guarantees are called underwriters. So if I'm invested in XYZ company, if the XYZ company are not ready to pay my amount, so someone else, that is ABC company, have taken the guarantee that instead of XYZ company, I'll pay the amount. That is called as an underwriting of shares. Okay. Next, underwriting commission. So a commission is given for the underwriters for underwriting the work. This commission is called as an, for that if I'm getting, if as an XYZ company I'm said, so I'm paying instead of ABC company, that paying that how to pay some amount, that will be called as an underwriting commissions. Then advantages and benefits of underwriting. So subscription of capital of the company becomes certain. That means if subscription will be possible, if instead of if XYZ company is asking a shares of public, so instead of me, the ABC company will pay the amount. That means the subscription will be more. They have the guarantee payment of their capital. Then they can invest it to our amount. Next, second advantages will be the company which has underwrite commands some more confidence among the public because subscribe feel that the company has been bad. Underwriter should have never entered into underwriting agreement. So they should have the guarantee that the public that, so if some person, if instead of XYZ company, ABC company is ready to pay the amount, that means XYZ company is well good. So anyone cannot support the bad company. So they have the guarantee that the company will have to pay the amount. Then it increases the goodwill of the company. So normally underwriters underwrite the shares and the debenture only those companies which are sound concerns whose futures bright. So that will be it. So if ABC company is ready to pay the debt of an XYZ company, that means they have the confidence that XYZ company will definitely make enough profit in the future, that has a bright future, that has a successful life of ending. So that means that will be create the goodwill. That means that will be create a good image in the public, in the minds of the public. Next, move to the partial underwriting. So this is a partial underwriting. That word is self telling that partial. That means some portion of the debt only we are underwriting. Some portion will be company will be underwriting. For example, if XYZ company taking a 10 lakh rupees loan from Mr. A. So if it is on a partial underwriting commission, underwriting means so on thoroughly 5 lakhs should be paid by the XYZ company and the 5 lakhs will be guaranteed by the ABC company. The ABC company will be responsible for the part amount of the repayment. That is what called as a partial underwriting. Next, firm underwriting. So when the underwriters agree to firm underwriting, it becomes additional liability. Therefore, it must be added the net liability under the agreement. It is calculation the net liability. That is step they have to calculate the gross liability of the company. They have to deduct the marketed applications for the gross liability. So these are all things I'm opening. Just a minute. Okay. So these are all the firm underwriting. Then move on to the legal provisions related to the underwriting commission. So what are the legal compliances they have to follow for the underwriting commission means first one, responsibility of underwriters of representatives. So if an underwriter dies, so its representative becomes liable for paying the. So if an XYZ company, sorry, if a ABC company is liable, as for our example, ABC company is underwriters. If the ABC company is dies, so someone representative or some other persons has to how to pay the amount of that persons. Next, directors and underwriting. So, except with the consent of the board of directors of a company, a director company shall not enter into contract with the company after the commencement of all the Companies Act of 1956. So, for underwriting the subscription of any shares in or in debenture of the company. So, provided that in case the company having a paid of share capital not less than the rupees of 1 crore, no contract shall be entered into except with the previous approval of the central government. They have a limited liability, means they will be within a rupees of 1 crore, they should be get obtained from the central government. Then statutory report. The statutory report shall be set out the extent, if any, to which each underwriting contract, if any, has been carried out and the reason for therefore. So next one will be the commission. A company may pay a commission to any person consideration of he is subscribing or agreeing the absolute or the contractually for the company. Then, so is procuring or agreeing to procure the subscriptions. So whether absolute or conditional for any shares in or debenture of the company, if the following conditions are fulfilled. The payment of commission is authorized by the articles. They should be have an agreement, means I am receiving this amount from that person. Then the commission paid or agreed to be paid does not exceed in case of the shares. So 5% of price at which the shares are issued, the amount of rate is authorized by the articles. So whichever is less, and in the case of debenture, 2.5% of the price at which the debenture are issued and the amount are authorized for them. Then the amount of percentage of commission is paid or agreed to paid is in the case of the shares of debenture offered to the public for the subscription disclosed in the prospectus in the case of the shares and the debenture not offered for the public for the subscription. So discussed in the statement of value. So we are already discussed the prospectus, that the nothing but the invitation that is given for the public for the subscription of debentures of the shares not offered to the public for the subscription, disclose the statement of lieu prospectus or in a statement in the prescribed form signed in the like manner as a statement in lieu prospectus and a field of with the register before the repayment of commission. Then the number of shares or debenture which the persons have agreed for commission to the subscribe the absolute and conditionality to disclose the manner of opposite, and a company of the contract for the payment of the commission is delivered to the registered at the time of delivery of the prospectus, so the statement in lieu of the prospectus for the registration. Then so these are all related to the underwriting of shares. So underwriting is nothing but they are going to make the payment instead of some other person. So if XYZ company issue the shares, so ABC company or any other persons have a guarantee that, so if you invested in this company, I will pay the amount of your capital or your return or anything. That is what underwriting. That means we are giving a guarantee of the repayment of their amount and the credentials. So in the first module, so till now we have discussed about the in the block 1. So what are the types of maintaining the accounts? So what the company should maintain the accounts, what do you mean by companies, what are the features of a companies, and the issue of shares. That means how to issue the shares. We have the three types of issue of shares, that is par, premium and the discount. Par means we are issuing at a face value, premium means we are issuing more than the face value, and the discount means you are issuing less than the face value. Then what are all the transactions should be, sorry, journal entries should be passed while you are issuing the shares. That means for the application you have to pass the two entry. One is the due entry, the amount has to be received, then the amount received should be transferred to the share capital account. Then you have moved to the due entry for the allotment. So how much amount you have to receive, then you have to make a received entry, and then you go for the first call. That means the amount due on the first call, due entry, again you move for the received of due entry. Then you are discussed about the forfeiture. Forfeiture is nothing but cancellation of shares. That means if the someone is not ready to pay the share prices, so as a company we have the right to cancel their shares. Okay, that is what called as a forfeiture. Then we discussed about reissue. So if the forfeiture says if 100 shares are issued to Mr. A, is not ready to pay the amount. If I deducted that shares, means if I cancel, that 100 shares will be again issued to some other person. That will be called as a reissue, and we discussed about the issue of debentures. So as a share is an instrument of like they will get the dividend, but the debenture will be get the fixed rate of interest. So that is what issue of debenture. For that you have to again make an a same entry like for application allotment or the payment or the first call. Likewise, as you pass the entries like a journal entries, likewise only you have to pass the entries for the issue of debenture also. So this is we have discussed in the unit 1, and the unit 2 discussed about the redemption of preference shares. We know that preference shareholders of the shareholders we have the preferential rights, means they will get a agreed rate of dividend. So that means we in the second unit discussed redemption, how you are going to repay the amount for them. Okay, we discussed about that. So condition for the Companies Act, while you are repaying the preference share amount, what are the conditions should be? The preference share should be have the fully paid up shares. That means the partly paid up shares cannot be redeemed, and there should be redeemed out of profit only. Then the if the redemption will be have a security premium you are paying, that has to be transferred to the security premium account. If you're using the surplus amount for the redemption of debenture or the repayment of preference share, so you have to transfer that amount for the capital redemption reserve account. So these are all will be discussed in the unit 2, and in the unit 3 we discussed about the redemption of debenture. So repayment of debenture, in that we have discussed about sinking fund insurance policy method. So in the unit 4 we discussed about underwriting, that is meaning partial form and legal provision related to underwriting commission. So how they are getting a commission, for that they have to mention in the prospectus, that is nothing but an invitation they have to mention. So these are all related to your first unit, that is block 1, introduction to the company's account. Do you have any doubts? You can chat me in the chat boxes. So in the block 2, we're going to discuss about the company final account and the liquidation. So in the block 2, again we have discussed about the related to the company final account, how they have to prepare the final accounts and the liquidation. So liquidation is nothing but they are going to close down, that is winding up of their company. So in that again we have studied the 4 units, that is unit 5. We discussed about the statutory provisions regarding the preparation of the company financial account. So what are all the provisions, what are all the rules and regulation they have to follow for the winding up of the company or the financial preparation of final accounts? Why I'm closing this company, I'm making account. So that information will be disclosed. Then in unit 6 we will go for the preparation of final accounts as per the new regulations. So as per the section 210 and the 211 you have make a provisions. So what are the rules and the legal compliances you have to make it. So in the unit 6 we are going to what are the new regulations for the preparation of financial account that has to be adopted. So in the unit 7, liquidation of company, means we are winding up of the company, their meaning and the models of winding. So how can we wind up our company? So what are the different types of winding up companies are available? We discussed there. Then consequences of winding up. So what are all the consequences they are maintaining for the winding up of the companies? Then concept of preferential payments and winding up. So preferential payment means for whom they have to pay first. So I'm closing out down my company. For example, XYZ company is running from the last 10 years. So now I'm not able to continue my business. I am going to close the XYZ company. So in while closing my company, so for the first who have to pay. So that is what preferential payment while winding up. ನಾನು ಕ್ಲೋಸ್ ಮಾಡ್ತಾ ಇದ್ದೀನಿ, ಯಾರ್ಯಾರಿಗೆ ಫಸ್ಟ್ ಪೇಮೆಂಟ್ ಮಾಡಬೇಕು ಅನ್ನೋದನ್ನ ಬರುತ್ತೆ. Then in unit 8 we'll going for the preparations of liquidators on the final statements of account. So liquidator is a person who take all the procedures and the proceedings related to the winding up of the company. So what are the how the liquidator will be prepared for that. So these are all will be discussed in the block 2. So in the next class we can discuss related to block 2. So I welcome you all for the any doubt regarding the these sessions or the problems or the first introduction to company accounts. We have completed the 4 modules block 1. So do you have any doubt regarding that? You can chat me. We have the 2 minutes time. I'll clarify your doubts. So most importantly, they can ask issue of shares. So you should know the what are all the entries and the transaction should be passed. So they may ask issue of shares with a forfeiture. So they give the transaction that they invited the public for the certain issue of shares at a premium. They can collect the amount on application 2 rupees and allotment 3 and first call 3 and final call rupees 2. Likewise, they given a transaction. Sometimes they can issue the shares at a premium also. For that, you have to pass the extra 2 transaction for the security premium and all. So be careful on the journal entries. Do learn the journal entries. So what are the entries we should pass while you are entering the transaction? So reissues you have to pass again 4 entries for the reissue. That means first you are making an entry for the cancellation. So I'm cancelling these shares and a reissue for that person whether you are issuing the shares. Then the amount that is profit and the reissue should be transferred to the capital redemption account. So these are all the entries you should be passed while you are entering the transactions. So these are all the things has to be taken care while you are making an account, and the debenture is also likewise. So what are the proceedings you are making issue of shares that has to be followed in the debenture also. Then underwriting of shares is very important. So what are the procedures they follow for underwriting? What is an underwriting means? That is a guarantee given by some person for the payment of shares. Then redemption of preference shares means they are repaying us preference shares. For that they are making a payment and all. So these all will be block one. We are completed with the block one. So in the next classes, in the next tomorrow classes, we go for the block two, that is company financial account and the liquidation. Thank you all. So if you have any doubts, if you do not have any doubt, I end up the classes. Okay. Thank you. Thank you all.